aviation sector has been the most hit on account of the COVID, and now we are also seeing rise in crude oil prices. Indian airlines are bleeding, of course, and to understand the impact of to understand the outlook on the Indian aviation sector as well as on the India's largest listed player, IndiGo Aviation, which is IndiGo. ET now caught up with Ronojoy Dutta, who is the CEO of IndiGo, to understand what is the outlook on IndiGo as well as on the Indian aviation sector. Do note that the stock of IndiGo is up close to around 2x from its lows of June 2020. In fact, in an exclusive conversation with ET Now's Nikunj Dalmia, Mr. Dutta stated that the first wave was shallow and the customers at that point in time were fairly hesitant. But in the second wave, that hesitancy on the part of the customers has gone away, and also the lag factor has disappeared. And he stated that in February 2021, we did see the peak of the air passenger traffic, but now after the COVID second wave, we have recovered close to around 60 to 70% from the peak of February 2021. He stated that he is very bullish in terms of the recovery going ahead, and 2022 we should be coming back to the pre-COVID levels, and as COVID declines, he expects that the traffic is likely to come back. However, international traffic may still take some time in India. He also stated that there are two things that is fairly crucial in a time of crisis. One is to communicate with all the stakeholders, which includes shareholders as well as employees, and secondly, it is to hold the employees together. And therein he stated that for IndiGo, at least, they have no plans to absolutely for a pay cut or layoffs for their employees, and the leave without pay is expected to drop out by next month, and after that he expects normalization for employees, salaries, etc. very much sooner. He also stated that economics is a merciless driver of decisions, and that he does not expect that there would be destructive pricing, at least for the industry. However, he did state that for IndiGo, they are pricing in such a way and they are putting capacities in such a way that cash is generated for IndiGo. He stated that increase in capacity on the part of the government is fairly important, not just for the Indian aviation industry but also for the country. So far, the government has recently hiked the capacity to 65%, which is a hike by the previous 50% Mr. Dutta also stated that the path to recovery for IndiGo Airlines is to reduce cost and to improve capacities, and he also stated that the third wave is inevitable and they are bracing for that accordingly. However, what is fairly positive about IndiGo is that they have a fairly strong balance sheet, and a healthy balance sheet is the best defense against the third wave. Also, that IndiGo has in fact vaccinated over 90% of its employees, and vaccination would be a key part in treading over the in being prepared towards dealing with the third wave. Speaking about business travel, Mr. Dutta stated that business travel was just 20% of the revenues pre-COVID, and in the worst case scenario it was 8%. Now it stands at 10 to 11%. However, he sees it to recover slowly to about 13 to 14%, and he does believe that the yields are likely to pick up as India has the lowest yields in the aviation sector. He also stated that seasonality is less of a factor now as it is being overwhelmed due to COVID, and we will have to still watch out for what is the kind of bookings that we see for Diwali or Dussehra or even post that. However, he believes that cargo is it is a huge opportunity for IndiGo. Narrow bodies are certainly doing well. There is a shift from wide body to narrow body, and they're seeing a lot of opportunity in cargo, and it is a structural shift for IndiGo. He also stated that they're also planning to add more neo engines which are 15% more fuel efficient, and the plan is to get rid of nearly around 100 fuel inefficient airplanes and get in 100 efficient airplanes over the next 2 years, which will help them further to reduce their fuel cost. He also stated that for IndiGo, which has gained market share through entire COVID. Now the market share stands at 55%. Their focus is not really on gaining market share or the share price, but it is a fallout of that, and they do have a strong ESG policy to reduce carbon print. Their immediate goals are to focus on improving capacity, improve fleet, focus on quality that they're offering to the customers. And he also stated that they can do a lot with their own network. There are so many international opportunities that Mr. Dutta himself is fairly excited about, and also he stated that I'm so very impatient for the international opportunities to open up, and IndiGo is ready with its fleet and everything. So yes, this is one opportunity that they're also looking out for. But yes, we also need to be watching out for that QIP of rupees 3,000 crore that IndiGo has been planning, so we will have to wait and watch out for that. But as of now, quite a lot of positive commentary coming in from IndiGo. They are planning to, in fact, or they're looking at a recovery in 2022 itself.